When will Toronto real estate investors break and capitulate because of these higher rates? And if they do, are they ever going to come back? And if they come back, can they save the market from bottoming out? Because that's the direction we're heading right now. Look, I'm going to give you my thoughts and 2 cents on this topic, so make sure to stay tuned. It's a little bit doom and gloom right now because of where the market is, but look, there are most definitely opportunities when the current sellers in the Toronto real estate market are going to have to sell because they can't hold on anymore. And if you want to have that opportunity, you got to be ready. It's not going to be when you read in the headlines where like, oh no, there goes the opportunity. The Toronto real estate market is rebounding. That's not when you're going to find a deal. Where you're going to find a deal is when it's heading down. And despite how everyone says you do not want to catch a falling knife, it is when the knives are falling, when you have peak fear. And when you have peak fear is when you have sellers who can actually, justify letting it go because they're afraid. And that's when you can strike a good deal. You don't catch these deals in like the average prices because like they're, here and there and they're far in between. But you catch the deals when you're on the lookout and you've analyzed the market you're targeting and you know what a good strike price is for your personal situation. And if this is you and you kind of want to talk about, what the strike price is for the area you're looking in and you want to gear up for these opportunities, you could book a call with me. Use the link that's right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me. And then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen and I run and operate a RE/MAX in the greater Toronto area on top of making awesome educational real estate content just like this one for you. And if you find any of these videos helpful in your real estate journey while you're buying, selling, or investing, or whatever, just curious about real estate, do me a solid and spread the knowledge by smashing the like button and subscribing to the Prime Props channel. Now, on to this week's episode. When will investors capitulate? Da-da-dun. And for anyone who doesn't know what capitulate is, it's just a fancy term for like, selling for a loss, right? This is, I would say, kind of a loaded question, but I'm gonna do my best to kind of give you an answer from the psychological side and then later the numeric side later on in the video, right? Now, make sure you keep this in mind when you're watching this video. Every investor's cash flow is different and each investor is different and each investor has a different level of risk tolerance and everybody's portfolio looks different. And their ability to hold on to their portfolio based on negative cash flow also depends on every investor and their general income to sustain it, right? But I am going to generalize from what I'm seeing and the calls that I'm getting that I'm talking to people about. So currently we're, I would say, heading into like peak fear phase very, very soon. And for anyone who isn't really familiar with these kind of like investment cycle phases, there's 4 phases, right? It goes 1, pessimism. We're like, is it that good? Is it going to get better? Then you get 2, optimism, like, oh, that's pretty good. Then 3, you got euphoria. Oh, better buy. Then 4, you got fear. And I would say like Q1 2022 was like euphoria. And then we've kind of slowly and surely just been delaying the onset of fear because of stuff like negative amortization. But now that, we're seeing inventory increase at quite a rapid rate and it's not being absorbed, I think fear is slowly going to start creeping into some sellers' minds. Some are just oblivious anyways. So the start of fall is always kind of like a new hope, right? Because the Toronto real estate market has been super resilient in the past decade plus. But the first month of the fall market fell short, pun intended, right? So the optimism of the quick rebound that is the Toronto real estate market is slowly going away as listings are sitting around. And I suspect that by mid to call it late November, another 5 to 6 weeks, we may start seeing prices drop and trend downward some more in the average price. The price discovery, when the prices are coming down, will come mainly from those who cannot hold on anymore. That hope is gone and they have to liquidate below whatever the market value is. And obviously the market value may keep going down if people keep liquidating for less and less. So this is exactly where some deals are to be had. Now, if the rates, like the mortgage rates, stay in the 6s, I suspect it's going to hurt. This is time under tension. And even though we may have some semblance of hope going to spring 2024, like the next kind of like busy season of real estate market, if spring 2024 flops, then I think we'll probably hit peak fear, right? I mean, we haven't recovered in a whole year. Then we'll probably start seeing some fireworks, right? Now, the question right now is how much holding power do most of these investors have versus the level of fear and the call it desire to exit the market right now. And we're starting to see some cracks in the market and some of the properties that I'm watching that sell. And I would say that, we're going to have a lot of fear leading up into the 2025 mortgage renewals because that's where the bulk of the renewals from the low pandemic rates are renewing. But more on that later. At the moment right now, we're slowly starting to see the cracks come through and they're getting bigger and bigger. But the question now, you ask is, are these investors going to come back in the future if rates come down? And I really think it just depends on the amount of fear and losses that they sustain right now between the market bounces back. And if you call it, you're a speculator, not an investor, like say maybe like you YOLO'd into a bunch of pre-constructions. Again, nothing against that, but like maybe they weren't the right decisions. I suspect maybe they'll be out of real estate forever. It's kind of like in the 90s when people were paper flipping, they lost a lot of money. They're that scarred. But I would say a lot of the people who've owned real estate for like 10 plus years and maybe have like 5+ year time horizon that I've been speaking to, even if they have to liquidate, they're going to come back. It's just they're basically preventing themselves from losing it all. However, the question is, if they come back, can they kind of prevent the market from bottling up some more? And this is where I have this like math equation I always use. So it's like this general rules I use to justify a purchase price, and it's using capitalization rates. So what I look for is if the capitalization rate is greater than the mortgage rates, I'm pretty sure investors will be back. And I'm going to get like a little bit nerdy for you guys to explain this, okay? So a capitalization rate, or what we call cap rate, is basically like the yield of a property, like how much money it spits to you every single year. So you can kind of think of it like the dividends of a stock if you're to buy stock, right? So the general rule says this: if the cap rates are greater than the mortgage rates, most likely investors will jump back in. But if the mortgage rates are greater than the cap rates, then they're likely to stay on the sidelines and stay put. And here's an example to kind of illustrate how this works. If you look at, call it the average downtown condo, the current cap rate is like 3 to 4% depending on taxes and maintenance fees, right? Meaning that the mortgage rate you're buying this property with needs to be less than 3 or 4% of the cap rate for most investors to make sense. And when I say investors, like true investors that are, able to justify the investment because of yield, not those who are chasing appreciation in the market, right? So again, no shade at pre-con, but that's kind of what pre-con's been since like 2018. So there's two ways for cap rates to go up, right? So you either got prices coming down or two, rents go up. And this is how the formula works, right? So your cap rate is basically your annual rent, so your monthly rent times 12, divide by what the asset was purchased at. So if the numerator, meaning the top number, which is rent, goes up, your cap rate goes up. If the denominator, the bottom number, goes down, meaning your prices go down, your cap rate goes up, right? Because it's division. So will there be a floor for the number-oriented type of investors, not speculators, to jump back in? Yes, if the cap rates are greater than the mortgage rate, I would say they will come back. And the dynamic really comes down to like how much rent appreciation we're going to get versus how much the prices are going to come down for properties relative to the mortgage rates that you can get right now on an investment property. You see kind of how that dynamic works out. So let me show you the kind of downtown condo example. You can see over here, right? Currently, we're at like 4% cap rate in this example. And note, to try to keep things simple, NOI is basically what I'm using as rent. NOI is basically net operating income, which is just rent minus your expenses. And in the case of the condo, your expenses are taxes, insurance, and maintenance fee. So assuming you have call it a $2,500 rent for this one bedroom, that's $600,000. I'm just loosely saying $200 a month in taxes and $300 in maintenance fee. Okay. So that's why I have $2,000 on your NOI here. And you can see that if prices were to drop 20%, the cap rate goes up to 4.8%, which is still lower than the current mortgage rates right now, which is 6.5%. Now, if rents go up another 10% with the price drop, cap rates become 5.28%, right? Now, if that happens, will mortgage rates be below 5.28%? Yeah, honestly, nobody knows, right? Really, nobody knows. Now, keep in mind, in just the condo segment, especially downtown alone, in the last decade since I've been following this, cap rates have been equal to roughly what the mortgage rates have been, 3 to 4%, outside of the pandemic, obviously. So, a lot of people are buying condos even though they're breaking even, cash flow neutral. and still making money because the condos have appreciated so much. So we've had a lot of capital appreciation. So when will investors jump back in? I would say probably when this equation makes sense for them again, right? Or if we see like mortgage rates with a 4% in front of them, or we see prices drop 20%, like in the example I just showed you, right? Which is going to happen first? I don't know. We're going to see, right? Because there's a lot of like moving parts on both sides. And really, like I've been saying, nobody has any idea. And if this makes sense to you and you kind of want to take advantage of the maximum figure that's coming soon in the market, there are other areas where you can actually buy properties of higher cap rates outside of like downtown condos. And if you're wondering where they are, you can book a call with me using a link that's right here. It's www.chatwithzen.com. And I really hope this kind of gives you an idea of like, is there some hope in the real estate market that's coming? Maybe the investors will put a floor to the pricing. And when people ask me that, these dynamics that I explained to you, the cap rates, the rents, and also kind of the mortgage rates are kind of what I look at. And if those numbers make sense, then the true investors will come back. But at the current moment in the current market right now, yeah, the numbers are not looking good right now. Anyways, hope this helps. Until next time, your move, your future. See ya. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?